In this video, I'm going to break down the 10 real benefits of leasing a car, whether you're comparing lease versus finance, or you're just curious about how leasing fits into your bigger financial picture. I promise you'll walk away with valuable insight and probably a few surprises. So if you're on the fence about leasing your next vehicle, or just want to make a smarter, more informed decision the next time you head to the dealership, this video is for you. I promise you'll look at car shopping in a whole new light. The first benefit of leasing over financing is a lower monthly payment. According to Experian, the average monthly lease payment in 2024 was $638 compared to $655 for a finance vehicle. While that difference might not seem huge at first glance, and to be honest, the spread used to be much larger, it's mostly because people don't fully understand when leasing makes sense and when it doesn't. So to evaluate lease deals more accurately, I use something called the 1.25% rule of leasing, and here's how it works. You take your monthly payment with $0 down, assuming a standard 10 or 12,000 mile per year lease, and then you divide that monthly payment, that effective monthly payment, by the car's MSRP. And that percentage gives you a sense of the lease value. If you're over 1.5%, that car generally makes more sense to finance. Now, if you're under 1.5%, you're looking at a good lease deal in terms of value. If you're under 1.25%, that's what I consider a great lease deal in terms of value. And if you're under 1%, that's an amazing lease deal in terms of value. Now, the sub 1% lease deals are usually found on EVs and plug-in hybrids, though occasionally you'll find sub 1% lease deals on gas vehicles too. And here's an example of how the 1.25% rule of leasing works. So if you're leasing a car with a $50,000 MSRP and your monthly payment is $625 with $0 down, you're at 1.25%, which I consider a great deal. If the payment is $500 a month, that's 1%. That's what I consider an amazing deal. But if the payment is $1,000 a month, you're at 2%. And in that case, leasing likely doesn't make financial sense. You'd probably be better off financing that particular vehicle. The biggest financial advantage of leasing is lowering your total out-of-pocket costs over the term of the lease, which is typically 3 years. And once you cross that 1.5% threshold, your total costs begin to climb and you start to lose the key financial benefit that leasing provides. The second benefit of leasing is that you get more favorable tax treatment. You see, when you lease a car, you typically only pay sales tax on the depreciation portion of the vehicle, not the entire purchase price. In contrast, when you finance a car, you're required to pay tax on the full purchase price up front. So let's break it down with an example. Let's suppose you're looking at a $50,000 car with a 60% residual value, meaning it's expected to be worth $30,000 at the end of the lease. Now that $30,000 is the residual, or the value the manufacturer estimates the car will be worth at the end of the lease term, which is usually 3 years or 36,000 miles. Now that means that the car will depreciate by $20,000 over the course of the lease. And if you divide that by 36 months, your base monthly payment would be around $555 a month, assuming no interest and no fees. And here's the key point. You only pay sales tax on that $555 monthly payment. So at a 10% sales tax rate, you're effectively paying sales tax on just the $20,000 in depreciation, not the full $50,000 MSRP or selling price. Now, if you compare that to buying the car outright, if you finance the $50,000 purchase, you would owe $5,000 in sales tax up front. Again, that's assuming a 10% tax rate. Now, it doesn't matter if you keep the car for 10 days or 10 years, you're still paying sales tax on the entire purchase price. And that, ladies and gentlemen, is how leasing can help you save significantly on taxes. Another major benefit of leasing is how it shows up on your credit report compared to financing. You see, when you finance a $50,000 car, the entire $50,000 loan, assuming you put $0 down, is reported to the credit bureaus as outstanding debt. Now, that large amount can significantly impact your debt to income ratio, or your DTI, the percentage of your income that goes toward paying off debt, and may make it harder to qualify for other types of credit. You see, leasing, on the other hand, typically only reflects the portion of the vehicle's value you're actually paying for, which is usually the depreciation, which might be around $20,000 over the course of a 3-year lease. Now, because of that, the total amount reported as debt is much lower, and your monthly lease payment is often hundreds of dollars less than a finance payment for the same car. And a lower debt to income ratio and smaller reported debt can make your overall credit profile appear stronger to lenders. And this could help if you're applying for any major loan, not just a car loan. For example, if you're planning to take out a mortgage, apply for a personal loan, or even get approved for a high limit credit card, having a smaller auto-related debt burden could improve your chances of approval and even qualify you for better terms. The fourth advantage of leasing is that your car is almost always covered under the full manufacturer's bumper-to-bumper warranty for the entire lease term, which is typically 3, 4, or 5 years depending on the manufacturer. That means if anything goes wrong, you're not stuck footing the bill. So let's say your car has a serious computer malfunction, or let's say that the transmission fails. Now, these kinds of repairs can easily cost thousands of dollars, but with a lease, that's all covered under warranty. You don't pay a dime. Plus, most leases also include 24/7 roadside assistance, and if your car needs to be in the shop for a few days, you'll likely get a rental car at no cost. And this kind of protection isn't just about saving money, it's about peace of mind. You know that for the next 36 months, or however long your lease is, you won't be blindsided by a surprise repair bill. And leasing also makes it much easier to budget. Now, because the vehicle is under warranty and major repairs are covered, your only out-of-pocket expenses are your monthly payment, insurance, and maybe some routine maintenance like an oil change. And that predictability is a huge plus for anyone looking to manage their finances more carefully, especially in today's world where unexpected costs can throw off your entire budget. But with a leased vehicle, you know exactly what your car will cost you each month. No surprises and no stress. The fifth benefit of leasing a car is that you can usually get into a car with little to no money down, and that can be a game changer for your personal finances. So think about it. Instead of dropping $3,000 to $5,000 up front on a down payment, you could keep that money in your pocket and put it to work elsewhere, like investing in the stock market or parking it in a high yield savings account, which earns 4 to 5% interest. And over the course of a few years, that money could grow significantly instead of being tied up in a car that's depreciating the moment you drive it off the lot. And if you're looking for a solid high yield savings account, I've linked some of my favorite options below in the video description or in the link in my bio. These are accounts that I personally use and recommend. And here's something a lot of people don't really realize. When you put a large amount of money down on a lease, you're essentially prepaying for the car. It doesn't actually lower the total cost of the lease. It just lowers your monthly payment. So financially, it doesn't really make sense to put a lot down on a lease. And here's the risk of putting money down on a lease. So let's say you put $4,000 down on a lease. Some people put 5, 6, 7, upwards of $8,000 down on a lease. And let's say 2 months later, your car gets totaled or it gets stolen. Now, even if your insurance covers the value of the car, you may never see that down payment again. And that money is gone. So the better move is to put little to nothing down and look for a lease that meets my 1.25% rule of leasing. So that means your monthly payment is 1.5% or less of the vehicle's MSRP with $0 down. Now, if you stick to that guideline, not only do you keep more cash on hand, but you'll also lock in a low monthly payment, giving you both flexibility and value. The sixth benefit of leasing is that you take on none of the depreciation risk. You see, when people finance a car, they often face high monthly payments and are pressured to put down a large amount of money up front, sometimes $5,000, $6,000, $10,000 or more. Now, this might seem like the right move at the time, but in reality, it's often a bad deal. Now, not only are you locked into high monthly payments for years, you also put down a lot of money, but by the time you reach that 3 to 4 year mark, you might discover that the car's value has depreciated faster than you've paid it off, which can leave you with $7,000 to $10,000 or more in negative equity. And this negative equity means you owe more on your loan than the car is actually worth, which can be a major financial burden. So when you go to trade the car in or sell it, you're hit with a massive surprise. You're still paying off more than the car is worth. And what a lot of people do is they roll that negative equity quickly into their next loan, and the cycle continues, leaving you perpetually underwater on your car payments. Now with leasing, you avoid that vicious cycle entirely. And on top of that, your monthly payments are lower, you put less money down, so you're not locking yourself into a huge amount of debt. Plus, you know how much the car will depreciate by the end of the lease term because the manufacturer sets a residual value, and that's the estimated worth of the car at the end of the lease. And if at the end of your lease, the car has negative equity, you can simply walk away from the lease. You're not on the hook for paying off the remaining balance like you would be if you were financing. You see, leasing gives you peace of mind because you know your financial obligations up front and you don't have to worry about being stuck with negative equity when your lease ends. Benefit 7 of leasing is that it gives you access to the latest technology and safety features. You see, leasing a car gives you the opportunity to drive a new vehicle every few years, ensuring you always have access to the latest safety features. You see, modern cars are designed with advanced safety technology that wasn't available just a few years ago, offering features like pedestrian detection, collision avoidance, and adaptive cruise control, all aimed at protecting you, your passengers, and others on the road. And the reality is that newer cars are simply safer. They have stronger crash protection, they have more airbags, and smarter systems to help avoid accidents. And safety, ladies and gentlemen, is priceless. And with a lease, you can ensure you're always driving a vehicle that's up to date with the most advanced protection on the market. And by leasing, you're not only upgrading your driving experience, but you're also making an investment in your own safety and the safety of others on the road. The 8th advantage of leasing is that most leases come with built-in gap insurance, which protects you in case your vehicle is totaled. You see, when you finance a car, you almost always need to purchase separate gap insurance to cover the potential difference between what you owe and the car's value if something were to happen to it. Now, gap insurance can be an additional cost, and it usually is an additional cost, which adds to your monthly payment. But with a lease, it's typically already included, giving you peace of mind. You see, gap insurance ensures that if your leased car is totaled in an accident or stolen, you're not stuck paying the difference between what your car is worth and what you owe on the lease. So as an example, let's say you're financing a car and that car is worth $35,000 and now it's totaled and you owe $45,000 on your loan. Well, that gap insurance kicks in and covers that $10,000 difference. Now, when you finance a car, you have to pay a monthly premium for that gap insurance, but with most leases outside of Toyota, gap insurance is included in your monthly payment. The 9th benefit of leasing is that you're protected from diminished value after accidents. So when you lease a car, you're protected from the long-term financial impact of an accident. That's because at the end of the lease, you simply can return the vehicle as long as the damage was fixed according to lease standards, and any loss in market value due to that accident is the leasing company's problem, not yours. But when you finance or own a car, even if it's in a minor accident, it can significantly hurt your vehicle's resale or trade-in value. You see, the damage goes on the vehicle's Carfax or history report, and future buyers will often walk away or demand a steep discount. As an example, let's say you finance a $40,000 car and get into a fender bender. Now, even after it's repaired perfectly, the accident is on your vehicle's history report, and it could drop your car's value by $2,000 to $5,000. Now, that's money out of your pocket when you try to sell that car or trade it in. But with leasing, that diminished value hit doesn't affect you. You're not trying to resell the car, you're just giving it back at the end of the lease term. And as long as the repair meets the lease return standards, you're in the clear. The 10th benefit of leasing is that you have the ability to transfer your lease. So ladies and gentlemen, life happens. Maybe you get a new job out of state, maybe your family situation changes, or you just don't need a car anymore. Now, if you finance a car and let's say you want to sell it a year later, you're often stuck taking a major depreciation hit. And depending on the vehicle, it could be $5,000, $10,000, or even more, especially if it's a luxury car or an EV that depreciates quickly. But with leasing, you have an option that most people don't even realize exists. You can often transfer your lease to someone else using a service like Swap a Lease or Lease Trader. These platforms connect people who want short-term leases with people who want out of theirs. And here's how it works. So let's say your lease allows for transfers, and that's key. You'll want to double check your lease agreement because not all leases are transferable. But let's say you have the transferability ability. You can list your car on one of these platforms, and if someone takes it over, they can continue the payments and you walk away, saving yourself thousands of dollars in the process. Now, I personally haven't used these services, but I know many people who have. And this is just a level of flexibility you just don't get with financing, because once you buy a car, you're fully responsible for its resale value. And if the market crashes or demand drops, you're the one left holding the bag. But with a lease, you can pivot. Ladies and gentlemen, if you have any other questions or comments, please let me know in the comment section below. And if you haven't already, please be sure to check out DriveMatch.com. It's a company that I co-founded where you can get pre-negotiated lease deals across the country. And all of the lease deals are some of the best lease deals in the country. Otherwise, they don't even get posted on the website. And with that, I'm going to call it a video. Thank you all for watching. Financial knowledge is power. Please like and follow for more.